Hey, who said this investing thing was hard? After a pretty rocky, volatile summer, stocks have been rallying in September and into October. Commodities like gold and oil have been on fire. And, for the most part, bond prices have been up on long-term bonds, sending their yields lower. It really is all predicated on this notion that the Federal Reserve is very likely to sometime soon give some more details about a new round of quote-unquote quantitative easing to try and juice the economy and end some of these worries that people have. But what do you think? Can stocks, commodities, and other assets continue to rally, or is this recent run-up just for suckers? Jim Hornberger argues the latter and blames, not surprisingly, the Fed. Stocks and commodities are up because interest rates are too low at near 0%. That is the only reason. You can't make money in CDs, money market funds, real estate, etc. So where is the money flowing to? Stocks and commodities. There is another bubble brewing. Very, very interesting. A lot of people are worried, maybe not so much about stocks. Valuations are pretty reasonable, and earnings growth has been decent so far in the third quarter. Interestingly, though, another reader, Campbell Crockett, thinks that what Jim is critical of, low rates, is actually a good thing for stock investors. You have $50,000 in a Chase savings account that is earning 0.15% interest. You could buy a 10-year Treasury note with the money and earn 2.38% interest. You could buy shares of AT&T with the money and earn 5.93% interest. Clearly, it would be in my best interest to buy the AT&T shares as it maximizes my income. Bond yields have come up just a little bit in recent days since that comment, but it still is a valid argument that right now, if you're looking at bonds versus stocks, there are a lot of blue chips out there like AT&T that pay very healthy dividends. Of course, the risk is, will something like AT&T continue to appreciate in value, or will you have a higher dividend simply because the stock falls? And that's obviously always going to be a risk with something like a stock as opposed to a bond. Finally, John McDonald points out that investors have to treat any rally skeptically. Mr. Market continues to entice the foolish. Since when does the stock market have anything to do with the economy? October 9th, 2007, the peak in the Dow and the Great Recession officially began 2 months later. Wow, what insight the stock market has about the economy. A lot of people always talk about the market being this quote-unquote forward-looking mechanism, but the market can be wrong, as it was in 2007, as it has been over numerous times in history. So don't mistake the current rally for necessarily being a sign that the economy is going to be on the upswing anytime soon. A lot of the data points to the opposite, unfortunately.